Hey, how's it going? We made it to another Thursday. It's almost Friday, almost the weekend. We're just going to wait a sec, let some people join. I know some people are wrapping up work. Um, but yeah, hope everybody is having a good week so far. Yeah, if you guys want to, while we wait, maybe in the chat over, it should be on the right hand side of your screen. Tell me where you guys are from currently, or where you currently live. Y'all, where are you currently based? Right on, Robert. I'm actually in our San Francisco office right now, right by Giant Stadium. Yeah, I live over by Fort Mason. Gonna head back over, walk across the city after the session is done. Yeah, we'll wait a couple more minutes. But for the peeps that are here, if you haven't joined one of these Thursday sessions with me in the past couple weeks, basically I just pick a city that is of interest to a lot of the people that we're working with, a lot of the co-buy groups that we're working with, or people that are on our wait list. We did Austin last week, and then the week before that, we did Agunquit, Maine. And so today we're going to go through Denver using our app. If you guys have any cities that you'd like me to cover in 2 weeks from now or in the next month or so, throw them in the chat, and I can make sure to get those on the rolling list. Without further ado, though, let's start. People probably join. I am going to share my screen. The first thing I do in these sessions typically is I go through and I look ahead of time. I prep, despite what it might look like. I look at STR regulations in any of these cities that I cover in this market analysis. Right now, we are working on getting long-term rental data into our application. Right now, we only have short-term rental data, but that should change in the next week and a half. So looking at STR regulations in Denver, it is a pretty strict city. Not just Denver proper, but the surrounding suburbs are pretty strict. So if you're looking at Denver as an investment opportunity, just be aware that most cities require the home that you're trying to Airbnb or VRBO, they require it to be your primary home. So what that means is technically it's a home that you live in 50% of the year. You know, whether or not they can determine if it's your primary home or how many days you're actually there a year, that's up for debate. But just know, in terms of this to be a legal short-term rental, it should be your primary residence, which means 50% of the year you're actually living in that building. So STRs might be a little bit harder to do in Denver, but that still doesn't mean that you can't. It means that you could probably do it 50% of the year. It also opens up the door for a long-term rental, so 30 consecutive days or more. And I don't believe you need a license in most cities, including Denver, to have an LTR. So if you want to rent it month to month, you think, hey, maybe Denver, there's a lot of business travelers, somebody's going to be there for a month, or, snowbirds who come in and want to have access to the Rockies and to Boulder and Denver. Maybe they're going to come in during the winter and rent it out for a consecutive month or longer. I mentioned that the surrounding suburbs have equally as strict STR requirements and require, in the sense that they require it to be your primary residence. But there is one kind of hidden gem, the suburb of Denver that I've highlighted right here called Arvada. They do not require a home to be your primary residence to short-term rental it. So we'll go into our app and explore Arvada, specifically Arvada. We'll also cover some of the other areas. There's some cool appreciation numbers in Aurora and Denver in general. If you guys want links to STR regulations, I have a couple links here to the city of Denver, and then this really cool cheat sheet. Let me open that up. It's from a website I found, so take this with a grain of salt, but they cover Denver Metro and all these surrounding kind of suburbs. So really cool little resource right there. So let's get into our application. If you guys haven't used Nestment, don't have an account, go to nestment.com. You can sign up. It's free to use. It's free to use us as a service. So yeah, don't be shy. So we'll type in Denver just to start. And we will zoom out of Denver proper, like Denver downtown. And so we get a view of some of the suburbs. I have a feeling a lot of people, and people maybe on this call, are looking at Denver as an investment opportunity. You might be looking at it as a primary location, but I think a lot of people that have talked to us or groups that we're working with are looking at it as an investment opportunity. So with that said, I'm gonna play around with a couple filters. I only want to see homes over 200K and less than 600K. Seems like kind of a sweet spot for investing in Denver in terms of not sinking a ton of money into it as a down payment, but also getting something quality. So you can see that kind of filters out some of these like fancier places downtown, or maybe like huge houses that are going to be harder to get your money back from, just because the monthly mortgage is so expensive. It's going to be hard to get a renter to cover that. So let's start with just Denver in general. So I mentioned STR regulations are pretty strict in terms of this being your primary home. But what I noticed when I started looking at Denver this week is that all the suburbs, no matter if it's north, south, east, or west, have pretty solid appreciation projections. So we'll just click into this home in suburb south of Denver. It's in contract, but we can see that this area for a 3-bedroom, 2-bath home is projected to appreciate almost 7% a year over the next 5 years. So 7% appreciation is pretty killer. We'll go over to the east and just do a sample in Aurora. Maybe we'll find a home that I already saved. Let's take a look at this little gem. Again, in contract, but a 2-bed, 2-bath over in Aurora. Super cute. Expected to appreciate close to 10% a year for the next 5 years. So we actually pay a data provider, CoreLogic, quite a bit of money to get these forecasts, and we provide those for free for every single listing on our platform. So they do future projections, and they base their number or their appreciation on more than just historical numbers or historical trends. They factor in things like job growth, population size, the local economy, schools being built, school records, like how many kids are at schools, tax returns, things like that. So it's a pretty cool forward-looking appreciation number. With that said, Aurora, like I mentioned, really solid appreciation numbers. This is just a sample again, a 3-bed, 1-bath expected to appreciate close to 10% a year. And then we'll go north. Let's check out maybe this, let's get a prettier home. So this one is in Arvada, which is kind of that special neighborhood that does have better STR regulations, or not lack of regulations, more open to STRs, and it's expected to appreciate 6%. So I think a big theme as I'm looking at Denver this past week is that any of the suburbs surrounding Denver are expected to appreciate pretty well. If you're looking at an investment property and you just want pure appreciation, which is where you're going to generate the most wealth over time, Aurora seems like a good bet. So I would spend more time on our app in Aurora, looking at homes in this area. just because they're expected to have such a high appreciation compared to the other suburbs in Denver. Again, it seems like close to 10% expected appreciation in Aurora over the next 5 years. Let's see if we go a little south of Aurora, if that makes a difference. Yeah, so it does. So Aurora proper, expected to appreciate more. If you want to cash flow from an investment property and specifically want to Airbnb it, VRBO it, so that's a short-term rental, anything under 30 consecutive days that you're renting it to somebody. This is that area that I showed on the map, Arvada. So this location actually plays really nice with our application as is right now until we get long-term rental data into our platform, because you can look at the cash flow numbers in our application for Arvada and get a sense of, hey, I'm pretty confident I can get an Airbnb VRBO license through the city of Denver and operate this as a short-term rental. And you can kind of see how these places might cash flow and what the rate of return might be. So we calculate rate of return. We call it rate of return, but we use the IRR formula. And if you're not familiar with real estate metrics or financial kind of like instruments and calculations, the simplest way I can describe it is it factors in your cash flow and the equity that you built through paying your mortgage and the appreciation of the home. So it's kind of like a bundled way to look at cash flow and your equity that you're building with appreciation kept in mind. There's a whole time component to it, but it's a little more complicated to explain. So if you look at rate of return, just know that this is going to be like your initial investment, what your out of pocket is. Here, we'll just click in. So your all-in upfront costs, plus your monthly payments, like things like expenses, property tax and insurance, your mortgage payment. And it's calculated based on what you're going to get in terms of cash flow and the equity that you build. With that said, we also pull in things like what this house might, or a good idea of what the daily rental rate might be throughout the year. So we do an average. So for instance, this 4-bed, 2-bath in Arvada, on average, you can rent for $320 a night, and the average occupancy rate, so how much it's going to be filled by a renter on Airbnb or VRBO, is 52% of the year. So about half of the year, you can expect somebody to be renting this home from you or a similar home. And these two numbers really give you your monthly rental cash flow and your rental cash flow for the year. So you can see also what similar Airbnbs in the area are renting for right now. These aren't the average for the whole year. This is what they're actually renting for right now. So Arvada has really solid cash flow, really solid appreciation. And if you factor those two things in with a moderately priced house, $500,000, and we'll look at some cheaper ones, your overall rate of return is going to be 20% a year, or could be 20% a year. Again, nestimates that we call nestimates are all guesses based on data that we pay data providers for, and then we calculate on our back end. Let's look at a cheaper house, something that might be a little more appetizing to an investment property. I have a couple saved. I know I clicked on this one earlier, but this one's under $400K. Again, it's in contract right now, but this gives you a good sense of what a 3-bed, 3-bath in Arvada might produce. And it looks like, 3-bed, 3-bath, it is occupied a lot less of the year than that other listing that I just clicked on, which was a 4-bed, 2-bath. So keep that in mind. Depending on how many bedrooms there are, the occupancy rate, how many days out of the year it's going to be rented, is going to vary in certain cities. Some cities, it's pretty agnostic. Doesn't really matter if it's a 3-bed, a 4-bed, a 5-bed. It might be the same. But it looks like in Arvada, it does make quite a difference between a 4-bed and a 3-bed. So let's try to confirm that and click on another 3-bed and see if the occupancy rate is lower. No, it's about 55%. So this could be just where it is in Arvada. We do our estimates based on the geography, even inside of a city. So keep that in mind if you are looking at Arvada on our app. The geography is going to play into your cash flow, even if you're just looking in Arvada. I kind of want to find a higher bed count. Let's look at a 5-bed and see if the occupancy rate, yeah, it's about 52%. I'm kind of curious where on the map these are. So you can see that this cluster of homes with a better occupancy rate is kind of in this this zone right here of Arvada, Garrison Lakes. And I don't know, I've never been to Garrison Lakes, but that could be something interesting to keep your eye on, specifically this area, that Garrison Lakes area. Let's go ahead and remove the price filter and look at more homes in Arvada and see if there's any of these rates of return that really stand out that I haven't saved. No, I think those two outliers near Garrison Lakes are really the kind of peak rate of returns, or the best rate of returns. So something about that Garrison Lakes area, I would keep your eye on if you are interested in short-term rental or you're really into cash flow. So we'll zoom out so you can kind of see where it is in accordance to Denver. It looks like it's to the northwest of Denver, on the way to Boulder. So Arvada could be cool if somebody's considering staying there for a week, that it is on the way to Boulder. Boulder, I believe, is up here. Yeah, Boulder's right here. So it is kind of in this corridor of Denver to Boulder. And maybe that's an ideal place for people to be in between, Boulder, which is really cool and quaint. Denver, you have a city. And then to the west, you have access to the Rockies and a bunch of ski resorts. I think Keystone is pretty close. I've been there from Denver. So I'm also kind of curious what these listings look like that might be at the foothills of the Rockies, like in that pass or any number one of these highways that goes in there. So let's look at Golden. I mean, it's a pretty expensive home. I probably wouldn't choose a home this expensive as a pure investment property. But again, appreciation in Denver looks like it's killer everywhere. Which, on a $900,000 home, 6% appreciation per year, that's a good chunk of money. Golden, I believe still this would need to be your primary home to short-term rental it. But since it's so close to the Rockies, like right on one of those highways that goes into the Rockies, this might be a good long-term rental. People that want to stay there for a month at a time, either in the summer or winter. Again, $900,000 for an investment property is a big chunk of change. Let's see if there's anything cheaper that is on that way. I'm always a little bit suspicious when the first picture of a listing is their bathroom, but it's under 500K. It's 3-bed, 3-bath. And the other, I don't know why they didn't lead with some of these other photos. The appreciation is still expected to be 6%. It's kind of cool and cute. This could be a long-term rental as well. Okay. Yeah, they should have started with these photos. So if you're looking for a smaller price point, that's kind of has better access, quicker access to the Rockies, there is some stuff. What is this area called? 6th Ave West, Union Square. This is only a 1-bedroom, so I probably wouldn't look at it as an investment opportunity. I was just curious if it looked, it's hard to find a place in Denver that doesn't look good, at least on photos. But again, you don't know. There could be a lot of couples that might want to Airbnb this or long-term rental this. It's only 1 bed, 1 bath. Or somebody who's there on work who needs access to Denver, but also wants to go hit up one of the ski resorts on a weekend or a long weekend as well. This is an area I didn't prep for, but I'm kind of curious about Rooney Valley. I didn't see any STR regulations on this area. Not to say that there aren't any. I just didn't see any when I looked at the Metro Denver. But some of these homes are really cool looking. They're just, over 500K. Let's see if we max out the price. Yeah, there's nothing in Rooney. Maybe in the chat, if you guys have like a price point you're looking at for Denver, you can let me know. And let me know if the people on this are also looking at Denver as an investment opportunity or a primary. And I can kind of narrow some stuff down on this call as well. This is closer to 3 Lakes, kind of like a standard looking condo. But again, with appreciation and, this area potentially being STR friendly, could be a really good investment opportunity. I don't know about carpet for a rental. Obviously, you need to do some updates, but now that we're getting kind of out of Denver proper, there might be some opportunities for better STRs in these areas. I mean, these addresses all say Denver, so I'm assuming they fall under the metro. But this looks like a pretty big cluster, and I'm kind of curious if this is a development. Yeah, it looks like these are all units in a development. Let me check the chat real quick and see if anybody said investment or a price point. Ruby Hill, again, looking at places under 500K, that could be interesting. This place kind of cute and quaint. I mean, I love the mushroom wallpaper. That's fun. Damn, really cool living room, cool little outdoor area if it's summertime. I mean, this is staged pretty well. So there are some opportunities, like I mentioned, around 500K. They could be great investment opportunities. I'm not sure if you guys have talked to lenders yet or talked to a lender through us, but there are a lot of options if this is an investment property to do less than 20% down. My personal group, we're looking in California, and I think that we're looking at putting 10% down. So keep that in mind, that you can change your down payment size as well. And if this is an investment opportunity, a smaller down payment goes a long way. If you want to do a couple investment properties, know that you don't need 20% down necessarily. Again, it depends on things like your credit score and the price of the place that you're buying. But it is an option. Yeah, I'm going to save this even though it's in contract. This could be a really cool, just like a reminder of what investment opportunities are like, or like what good ones are in Denver. I've only stayed in closer areas to Denver proper, but I honestly was surprised at how many homes were under 500K, even in the surrounding areas. Let's see why I favored this one. Again, I live in San Francisco and just California in general. Okay, Neil, perfect. I had a feeling, people were looking at this exact criteria. Investment property under 500K is about right. Being in California and seeing homes under 500K that are nice and not in Modesto or Fresno or Victorville is like it really opens up some cool markets and opportunities. So I've enjoyed looking at Denver a lot. This is a 1 bed, 1 bath. It looks, it's only 1,000 square feet. Maybe it's one of the units in this. But Neil, yeah, I mean, if you haven't used our platform yet, You don't even need to sign up, but if you want to see all of the Nesmit numbers that we calculate and tweak them, you'll just need to sign up for an account. It's free. But I'm pretty stoked for you. I would definitely zero in on this Arvada neighborhood if you want to STR it. As I mentioned, I would say a week and a half, 2 weeks, we're going to have long-term rental data in our Nestimate and in our platform. So that will open up a lot more options. If you're looking at Denver and in 2 weeks you pop back in, you can toggle our Nestimate and see how much you can LTR it for on average per year. And then real quick, I just want to go to this Thornton area that's north. I didn't see anything about Thornton when I looked at STR regulations, not to say that there aren't any, but it looks like there's a handful of listings that are around that 500K mark that cash flow quite nicely. I mean, almost 50% of the year they're expected to be rented. So Neil, this could be, maybe Thornton is a good area for you as well. Yeah, I mean, 375, depending on, I mean, this is a pretty cool place. It's funky. I mean, I haven't seen it in person, but some of these places, if they're structurally fine and pass inspection, like you could start Airbnb. It looks like right away if you wanted to. So Neil, also look at this Thornton area. I'm actually going to save this one to my Denver listings as well. Neil, Arvada. So I'll go back to this real quick. STR regulations. So for much of Denver Metro, it has to be your primary home in order to short-term rental it. So that means you have to technically live in this home for 50% of the year for it to qualify as your primary home. I don't know how they prove, I'm not saying do this, I don't know how they prove that you're actually living there for 50% of the year. So you could probably use your imagination or get creative. The one city or one large area that doesn't require it to be your primary home, it can just be a pure investment property, is Arvada. So that's why we were looking at it earlier. And it's quite a large area. It's in this northwest section of Denver, kind of on the way to Boulder. But again, I didn't see anything regarding Thornton, and it looks like these homes, the address is in Thornton, not Denver. So maybe this north area could be better for STRs in terms of regulations. You'll have to check Thornton, like City of Thornton, their website. But I mean, they have a handful of gems, it looks like, up here. And we pull in short-term rental data for you so you can accurately project the rental cash flow. Yeah, let me know if that answers your question. But I try to keep these to a tight 30 minutes. I know it's Thursday. Everybody probably wants to do something fun. But let me know. You guys can email me if there is city you want me to cover next. I'm just mark@netsman.com. I typically don't give out my email, but to people who join this, I give my email too. If you guys are interested in talking to somebody on our team about investing in Denver, again, it's free to use us and our service. We do soup to nuts. We do everything from legal to lending, connecting you with an agent, finding you a property manager. We make our money on the real estate agent commission. If you guys do end up purchasing a home, that's how we get paid. We just want people to be successful. I mean, it's how most people at our startup are able to purchase their home, is through co-buying. It's how I'm able to be a homeowner, is through co-buying. So yeah, we're just here to make that process a whole lot easier. You can go on our website and you can either sign up or you can reserve a spot here, or you can go to how it works. It's a little bit hidden, and schedule a call. This is kind of like a shortcut to getting in touch with Emily and not getting stuck on our wait list. So go to How It Works and schedule a call, and you can talk with us. We do have a ton of groups right now. I think we have like 1,300 go-by groups, and it grows every day. So we ask, we let you know where you are in the queue, but what I just showed you on How It Works and then just schedule a call, it's kind of the way just to shortcut yourself to the front of the line. I don't know that I should be telling people that. It wasn't intentional, but people have been figuring it out, so I might as well tell you. Yeah. But I hope you guys have a good week. Again, if you guys need to get in touch with me or want to know more, just hit me up, mark@nestman.com. Go create a Nestman account. It's free to use. We have a ton of data that we pay a lot of money for that's free for you to use. But yeah, I'm excited to do the next one in 2 weeks. We'll let you guys know via email where we choose next. But take it easy and have a good week. Bye, guys.